Hello and good day. So today I'm going to be talking about a very simple and easy strategy that I've made use of. Now this strategy is based off on time. All right, so you must have heard about time trading. You must have heard about trading based off time. So we talk about sessions, the Asian session, we talk about the London session, we talk about the New York session. So there are many sessions you can actually look forward to trading. But this strategy is actually taking advantage of these sessions in a way that now allows you to make profit off the market. So let's look at this. The first thing you want to look out for is to get your tool. Now, the tool we are going to be making use of, you have to go to your indicators. I think your indicators. Once you go to your indicator, then you want to look for the Lux Algo sessions. Lux Algo sessions. Let me go to it so that I don't complicate things here. So this here is the indicator. You want to go to Lux Algo and then you want to find sessions. Okay, I can decide to type sessions and then I could see Lux Algo. Now this is Lux Algo sessions. So once you click on that, you are supposed to see something like this on your screen. Now the thing is, you can modify this. All right, so you can modify this to your taste. Now what I make use of is New York and the range, London and the range. That's all. I don't make use of the Tokyo session. I don't make use of the Sydney session. I have my range outline and my range label. So you can take a pause on this video and then look at the things that I was able to mark or include in the chart. All right, you can take a screenshot or just take a note of the things that you can see on your screen. All right, so that's it. So what we want to look for is a very simple and easy system. Very simple and easy. Okay, but before then, let me get this off. All right, so this is not making me. All right, so let's look at this. Now, our strategy is based off something very simple. So we want to look for the market to get to. Yeah, this is the kind of pattern we are looking forward to taking. All right, the pattern is based off on liquidity. All right, if you don't know about liquidity, you can go and make your research about liquidity. Liquidity is actually what moves the market, what makes the market move. All right, but when the market begins to move, there are certain areas that the market is actually looking forward to, to getting before any downward move or any upward move. So we want to look forward for liquidity to be taken out. But if liquidity is taken out towards the direction that we intend that this market goes to or price goes to, we want to first check out what areas is the market looking forward to going into. Do we have the market going into a fair value gap, or do we have the market going into an order block? All right, so before liquidity is taken, you want to check out for those areas. A fair value gap is an area where the market is usually headed for, and an order block is usually an area where the market is actually headed for. But that's not all. We want to also include a very simple and effective system. I found it very effective, and I've also found it a very effective way of actually removing unnecessary analysis. All right, so you want to find out, okay, this is what I want to do, this is what I want to do, and this is what I want to do before I'm able to get an entry. So all we are looking for is liquidity to be taken. One, we want to look for the market to go into a fair value gap or an area of interest. But don't forget, we are also going to be making use of these London sessions and New York sessions. So keep this in mind while we go into the charts. So the first thing we want to look out for is we want to look out for liquidity, and that liquidity should be lying, this liquidity right there should be lying around, the London low or the New York low. So take note of that. Should be lying below the London low or the New York low. So this is the previous day. Today is actually Friday. This is the current market currently running, and this is the low of the previous day. All right, so you can see that London is open right there. And now, since London is open, we are looking forward for market to take out liquidity to the downside. And then what are we looking out for? We want to look for an order block below that liquidity. All right, an order block that has a fair value gap. So you can see this is on. Now, this allows us to mind or to pay attention to the most effective order block of fair value gap, knowing that we have taken liquidity, not just a random liquidity, but liquidity of the previous day, which means that people have been buying into that zone the day before, and most likely the market would come down towards the area of interest. Now, the area of interest would be this, which is the order block. Now, I know the order block is quite large. You go into the lower time frame, and then you can now begin to look for areas where you can actually take that trade towards the upside. So what I will be expecting would be something like this, market taking out liquidity, and then we can now push higher. But before then, you can also add it with many other confluences like this. We have also a support area right there. So the market has a support area. So I can decide to put a pending order right here. Go for a long position right there, and then my stop loss could be below that order block, or I can decide to minimize it a little just in case. So I prefer to make use of something a little larger so that I am not regretting in any way. All right, so you have to be very cautious. You have to ensure that you are able to balance your greed alongside your risk management. Very important. A lot of people have tried to make use of really tight stop losses in the name of actually making money, but at the end of the day, they lose more money than they actually make because of greed. I'll call it greed. All right, so this is a very simple and easy strategy. So let's look at some of the examples in the past. All right, so I'm expecting that push here and then push down, and then we can now look forward for a buyer right there. So most likely the coming week, this is USD CHF chart, so you could also go look at it. Now the thing is this, there is no perfect strategy. All right, the fact that something works or have worked in the times past does not mean it will continue to work every single day. There are sometimes you may take a trade, it does not go in your favor, and that's fine. That's trading for you. All right, what's most important for you is that you are able to manage your trade, you're able to manage your emotions, and you are able to manage your risk very effectively. So that's what really matters. All right, so we could take that trade and have a risk reward ratio of 1 to 3 on that. Okay, now let's go back in time. Let's see if we also have opportunities that are similar to this one. Okay, so we can look at this. So we see this here. This was a day right here. Okay, and we see that the market took out liquidity right above. So the previous day was taken out. This was liquidity from the previous day, and the market took that out quite nicely. When it took that out, we see a fair value gap right here. There was a fair value gap within that space. Okay, very little. Okay, and above that fair value gap, we see an order block right there. And what do we see? We see the market tap into that zone after taking liquidity of the previous day, tapping into that order block, and we started seeing a push down. So if I wanted to take a trade at that point, I'll be looking forward to take a trade somewhere around here. My stop loss definitely will be above. Remember, I talked about how to set stop losses. If you have not checked out my video on why people get stopped out, you have to go check it out. So this is a risk reward ratio of 1 to 3. So we take that trade right there, stop loss above that zone right there, and then you want to take your profit. At least a risk reward ratio of 1 to 3, 1 to 2 is fine, or 1 to 3 is also okay. All right, so there are many opportunities like that you can always keep on finding, keep on looking out for. Okay, so you want to make sure that your strategy is simple and easy. So this is a very simple and effective strategy. So you can walk up on the chart on a Monday morning, on a Tuesday morning, on Wednesday morning, and just look out if there's liquidity taken out from the previous day. You look for a fair value gap, look for an order block, and then you want to take out your trade. If you don't see an opportunity like that, you can go off the chart and then go and relax. Go do something else that is most important to you. All right. So in this case, we also see the same thing here. We see that the market took out liquidity from the previous day and did not just take out liquidity from the previous day, it also took out liquidity from the day before, which was right here. And then what do we see? We see the market come into a fair value gap right here, which is also close to the order block above there. Okay. Now, if I wanted to take this trade, I most likely would have missed out on this opportunity for some reason. All right. I might have missed out on the opportunity because I will also be looking out for, for the market to come into this area, which is a support, a resistance zone, and then look forward for a push to the downside. Some people love to take trades at fair value gaps like that, so that they don't miss out on moves, because sometimes the market can get into a fair value gap, not get into the order block, and then moves in your favor. So you put this at the top right there, and then you want to target a risk reward ratio of 1 to 3 or 1 to 2 at most. All right. So in this case, we did not get to 1 to 3, but we definitely got to a 1 to 2. All right. So you can make use of a fair value gap if you want to, fair value gap, or you can make use of the order block. So there are many systems, many strategies that you can, add together, put together to ensure that you are able to increase your win rate. This is just one of them, and you can make it as simple and easy as possible. So this is just one chart. This is just one chart, one currency pair, and you can also check it out for multiple currency pairs. All right. So just check out all the currency pairs that you have been trading, and then look for the currency or the opportunities that fit the criteria that I've made known to you. Liquidity should be the London high or New York high of the previous day, and then you want the market to go towards a fair value gap or an order block, and that is where you want to take your trade. You also want to look for opportunities probably that is close to a support or a resistance area, because that gives you a perfect entry criteria and ensures that you are able to make profit as frequently as you possibly can. All right. I hope you enjoyed this video, and if you did enjoy this video, give it a thumbs up, a like, and try as much as possible to share to your trading friends and let them see that trading can be quite easy too. All right. Have a wonderful day, and take care.